These index universal life versus 401k arguments are pretty intense, so we should probably just start out and say that if we were all together getting a coffee or a glass of wine, we'd probably be great friends. But with that being said, I'll just drop my 2 cents. It's worth noting where we're getting our information. This first article sounding the alarm on index universal life insurance was written by Ed and then fact-checked by Les. And who is Ed? Well, he's an award-winning investigative journalist. And the other article stating index universal life might be the new 401k is written by Dr. Edward Burns. And the first line on Mr. Burns' LinkedIn is, "I help insurance agents sell more." So there might be a little biasy to the article. And Forbes makes that pretty clear right at the top. It's a council post that the opinions expressed are those of the author and that he's a paying member to do so. And they make it pretty clear that you can pay to share your insights on Forbes.com. And why should you take the time to create expert content when you have a business to run and 10,000 other things to do? Well, simply to generate more business opportunities. So that's kind of a shaky place to start at best. I love in the article when it says, as a business owner, now is the time to ask yourself the following questions. Who is my financial planner? I think another really good question to ask yourself is, how does your financial advisor get paid? Are they incentivized to offer products that they only get paid on? A 401k is a tax code given by the IRS to tax you only on your harvest, not on your seed. Basically saying that the 401k is only going to tax you on this massive harvest at the end and not on the little bit that you put in at the beginning. And that's simply just not true because the 401k gives you the option to choose the traditional or the Roth. So you can pick which one and actually change throughout your income years as your income happens to change. So for example, if you have a lower income and a lower tax rate, it might make sense to contribute to a Roth, aka lock in your taxes, pay now, and then you'll never have to pay taxes again. Meanwhile, if you're a high income earner, you might want to defer your taxes because in retirement, when you're not working anymore and you're just withdrawing from your portfolio, you'll probably pay a lower tax rate. This is a funny claim. And if you convince the middle class to put all their money into 401ks, you can tax their payouts later in life and collect more from the middle class. Well, according to taxpolicycenter.org, if you go to the middle quintile, back in the 80s, the effective tax rate for middle class was around 19%, and you fast forward to 2018 and it's closer to 13%. Pretty similar results for the second and lowest quintile too, seeing that their tax rates are dropping significantly. Maybe the 401k was a conspiracy by the government to try to get more out of the middle class for taxes, but it really backfired. And it'd also be really strange why they'd introduce the Roth so that you have the option to kind of choose. Another thing I'll say on taxes is that trying to create tax-free income should not be your goal. I know that sounds really nice from a sales perspective, but really your goal should be to lower your overall tax rate over your lifetime. And that's just fundamentally done better switching between traditional and Roth 401k and IRAs. Overall, I am yet to find an advisor who recommends this who is not paid by this type of product.